All right, everyone. Thank you so much for joining us on another edition of our Franchise Your Business podcast and webinar series. My name is Tom Dufour. I'm the founder and CEO of Big Sky Franchise Team. And if you're new to us here, first things first, I'd love to make sure that you subscribe to how you're listening, whether you're listening on your favorite podcast service. So if you're on Apple or Spotify, please hit subscribe and give us a review. If you're watching on or listening on YouTube, please subscribe to our YouTube channel. All of this gets better with you all subscribing, so you can stay current with the content that we're producing to help you along on your franchise journey. Now, the other piece for you to know is we do have a second podcast called Multiply Your Success. It's actually the number 4 rated franchise podcast in the world. So if you love this content, I know you're going to love the other content we produce on our Multiply Your Success podcast, which you can find on your favorite service. So go ahead and hit subscribe on that too. We would greatly, greatly appreciate it. And lastly, if you are in need of help with franchise sales support, franchise marketing, franchise lead generation, if you need help in any of those areas, reach out to me and my company and our team. We'd be happy to schedule a free, no obligation consultation with you to talk through how we might be able to help support you. We've got some really, really great offerings available today, especially on how to navigate and get found in AI searches. How are you showing up there? Most of you probably don't have a plan for it. So we have a solution that's super affordable and easy to implement, and our clients are already seeing big results in just 4 or 5 months of using it. So you can learn more about that on our and get in contact with us to schedule that at bigskyfranchiseteam.com. That's bigskyfranchiseteam.com. Okay, and with that, what I would like to do is jump into our session. If you're new to this session with us, please note I jumped through a bunch of content and a bunch of data and facts and try to make sense of it for us from a franchise sales and marketing perspective and a franchisor perspective to start seeing how we might be able to make adjustments and tweaks and have a plan on what to do as this comes through. So with that being said, I'm going to share my screen. For those that are audio only, you won't see this, so I will do my best to try and explain it to you as we talk through it. So the first reports I like to show are from the Institute for Supply Management, their Purchasing Managers Index reports that they prepare. They prepare 2 different reports. The first report I like to look at is the manufacturing PMI report. This is from April of 2026. This is their most recent report. And the analysis was done by Susan Spence, who's the chair of the Institute for Supply Management Manufacturing Business Survey Committee. Now, what I like about manufacturing PMI is that this report tends to be a leading indicator. And so it says manufacturing PMI is at 52.7%. And the paragraph reads, the U.S. manufacturing sector expanded in April for the 4th straight month following a 10-month period of contraction, registering 52.7%, the same reading as March. Of the 5 sub-indexes that directly factor into the manufacturing PMI, 3 of them were in expansion territory, the same as in March. The employment and inventories indexes stayed in contraction, with employment in decline compared to March. So bottom line, what is this showing? Is it's showing that the last 4 months we've been in a growth segment here for manufacturing. It's been a while since we've been this high, period. And if you're looking on this chart, you can see that since the beginning of 2024, we've only had in all of 2024 and 25, it looks based off of this report that there was only about 2 months in those 2 years that were in expansion territory. And here we are at the start of 2026, not quite halfway through the year, and we've already have 4 out of the available 5 months, all 4 months according to this report, because this is for January, February, March, and April, because they haven't done May yet. So That's significant. So what does that mean to me? PMI manufacturing, that means manufacturers are buying stuff and they're buying supplies from purchasing managers because they're selling more stuff and new orders are coming in. So manufacturing has the greatest ripple effect on the economy in terms of number of businesses, industries, people it touches. So this is why manufacturing is still such an important number to evaluate and look at, even though manufacturing is a smaller percentage of the overall American GDP and American economy. Okay, so let's take a look now at services PMI. Oh, one quick thing back to manufacturing. My point that I was going at is that with this in a positive uptick, this to me indicates that we are, fingers crossed, going to see the economy is going to be clicking at a better pace. You should see things improving, especially for that small to mid-sized business segment. So be on the lookout for that for the last half of this year. I think we might see that starting to rev up in a positive direction based off of these numbers here. Okay. Next up is the services PMI, and the services PMI was at 53.6%. This is the report, the ISM Services PMI report for April of 2026. The analysis was done by Steve Miller, the chair of the Institute for Supply Management Services Business Survey Committee. And it says in this first paragraph, in April, the services PMI registered 53.6%, 1.1 percentage points above its 12-month moving average of 52.5%. A reading above 50% indicates the services sector economy is generally expanding. Below 50% indicates it is generally contracting. Services PMI above 48.1% over time generally indicates an expansion of the overall economy. Therefore, the April services PMI indicates the overall economy is expanding for the 71st straight month. So, all that being said, this is a second reinforcement of the previous report that we're seeing. So, hopefully, fingers crossed, again, this looks like things are revving up, and you can see if you're looking at this visually here about maybe September or October of September-ish of last year, you start to see from this midpoint at the 50th percentile on up to today, just kind of this nice curve or this trend line you can see that is up and to the right at a steady pace. So I think that's a great indicator for us of where the economy is and where it's going. And for those of you with franchisees, this is a good sign to start thinking about. One, we see that it looks like this is going to continue into the future based off of the manufacturing report. And number two is that this should generally mean that for your current franchisees, they might even be selling, especially if you are in a services-oriented business, you might see revenue ticking up, or that it's a little bit easier to get to a yes. Okay, now it's time to take a look at the unemployment report. So this is from tradingeconomics.com and their United States unemployment rate. And the paragraph reads, or the first sentence here says, the U.S. unemployment rate held at 4.3% in April of 2026, in line with market expectations. However, the number of unemployed rose by 134,000 to 7.37 million, while total unemployment fell by 226,000 to 162.62 million. The labor force shrank by 92,000 to 170 million, pushing the participation rate down 0.1 percentage point to 61.8%. Its lowest since October of 2021. So to me, that's an important number. And then it reads, the employment rate also declined to 59.1%, the lowest in over 4 years from 59.2%. Meanwhile, the broader U6 unemployment rate, which includes discouraged and underemployed workers, increased to 8.2% from 8.0%. Okay, so I think in general, the unemployment rate looks reasonably healthy by the numbers. We still like to, if it can be, closer to 3%. But historically, when we expand out, and I'm going to pull up this chart that they have here and zoom out 10 years, you can see that back in May of 2016, it was 4.8%. So we're under where it was 10 years ago. However, however, the this participation rate and is interesting that it's the lowest since October of 2021. So that's basically when we were coming out of the COVID stuff at that point. And so when you start looking at it, start thinking, boy, that is pretty low participation rate. So what's contributing to that? You start thinking about that and start thinking about maybe as a way to help your if participation rate's low, a way to help support some of your franchisees. Maybe they're having a problem hiring staff or retaining staff. You might need to be start thinking creatively about providing some suggestions on attracting talent to their franchise location. It might be different or creative ways of getting to the labor force that's there, but they're just not participating right now. So just some food for thought on that. Uh, excuse me. Next up is the unemployment, or excuse me, the U.S. inflation rate, and it says the annual inflation rate and this is from tradingeconomics.com, and it says the annual inflation rate in the U.S. accelerated to 3.8% in April of 2026, the highest since May of 2023, compared to 3.3% in March. Figures came above forecasts of 3.7% as the oil shock triggered by the war with Iran continues to push prices higher. So inflation is up a bit, but overall, if we look at this chart, you can see here in February it's down at 2.4%. January was 2.4%. Now it's up to 3.8%. Let's zoom out because this is just looking at the 1 year. Let's go ahead and take a look at the 10-year for inflation. And you can see back in May of 2016, it was 1%. In May of 2017, 1.9%. So super low. And then if we zoom out to our max, it's not available. I see. But anyway, you can see here how that compares. And you see that it is showing a pretty big jump. It hasn't been this high in about 3 years. So we'll see if this continues, if it comes down. Obviously with oil prices, it sounds like being the largest contributor to that jump right now. So based on foreign affairs and activities that are going on. Okay, next that I like to take a look at is the survey of consumers from the University of Michigan. By the way, on the inflation rate, since the contributor to this is oil prices, that very well likely means that if you're in a services business that where you're driving to people or you have equipment you're operating that runs on diesel or gasoline, it's probably more expensive. So helping give your franchisees some suggestions and advice on how to weather this what seems like it could be a temporary influx in price increase once this Iran situation hopefully phases out here sooner rather than later, and things start to stabilize again. But meanwhile, helping provide some guidelines and guidance to your franchisees will absolutely be helpful. And maybe for your potential franchisees that are coming into these networks, just be aware of what they might be thinking. Oh, well, should I join now or later? How are gas prices or fuel prices going to impact my business? Do I need to make adjustments to my projected pricing as they start building out some of their own financial models that they might be building out? So those questions or thoughts might exist. So be mindful of that and aware of that to have a conversation with a potential franchisee as you're going through it. Okay, next up is this surveys of consumers from the University of Michigan, and we look at the index of consumer sentiment. And we like to take a look at that and let's see what it looks at. I haven't seen it yet. And it's showing that it dropped down another tick here last month. So, this is lower than it was in 2022. So this is low, which means that consumer sentiment is down. And I'm sure that this foreign war is not helping and other instances of that. So just keep in mind that the general psyche of the consumer is low, which means that they might need a little cheering up, a little support to help them along the way. Okay, my next report that I really like is the business formation statistics. This is from the United States Census Bureau, and this was released May 13th. So, what was that? About 9 days ago. And here's what it shows. It shows in April of 2026, there were a total of 503,171 new business applications filed across the entire country, and 146,782 of them are high propensity business applications. So I just think it's amazing to see how very shortly after COVID hit in bouncing into 2020, and it dipped down a little bit into 21, and then around the start of 2021, it's basically been at or above 400,000 most of the time. And then recently here, over the course of the last, call it 6 months, this has been edging higher to being at or around 500,000 new business startups. And keep in mind, pre-COVID, we were at 300,000. So we're talking about basically what is that? A 65% increase or so that we're looking at, or 2/3 basically that it's increased that you're looking at. So about a 67% increase in the number of new business applications. And why does that matter for us? Well, to me, it matters because it shows that the idea of startup sentiment is on the hearts and minds of Americans. Americans have the idea of self-employment on their mind. And while not all of 500,000 of these are buying franchises, of course they're not, but some of them are, and some of these that are starting these businesses might have been exploring franchise ownership. So as a franchise sales or marketing professional, it is important for you to assume that the buyers today are actively pursuing or looking to buy franchises. Okay, next up, I want to take a look at the Startup Sentiment Report from franchiseinsights.com by Franchise Ventures. And this is a report prepared by Michael Alston for Franchise Insights. And I'll zoom in. This was released May 6th of 2026. So just 3 weeks ago or 2 weeks ago, this was released. And it shows that a strong startup sentiment continues. The opening paragraph reads, startup sentiment was strong for the third consecutive month in April of 2026, as business buyer surveys showed that 62.6% of persons exploring ownership agree or strongly agree that now is a good time for startup, up from a recent low of 30% in December of 2025. So this echoes a similar sentiment to what we saw in the U.S. Census Bureau of the number of new franchises launch or new startup businesses launching, along with the startup sentiment. So people are taking action and starting businesses, and in general, it looks like their sentiment is optimistic or positive for realistically starting that business. Okay, next report's from franchiseinsights.com by Franchise Ventures, and this is a report that was released May 13th, 2026, and it reads, Learnings from Google and Meta Earnings for Franchise Lead Generation. And the opening sentence says, now that the first quarter earnings report for Google and Meta are behind us, there are a few hints about how the franchise lead generation ecosystem is changing. And it says, franchise development teams embraced Google AI ad tools ahead of the pack. Google shared in Q1 2026, 30% of companies using the company's paid search products also use their AI tools for campaign management, including Performance Max and AI Max. This adoption rate is much lower than the 42% of franchise development teams using these Google AI ad tools in 2025, and another 27.2% who plan to use them in 2026, according to the 2026 annual franchise development lead generation survey. So, point being that on average, it's showing that about 30% of marketers are using this. And in franchising, more and more folks are using these AI tools to help manage their ads. So just some food for thought to say, are you using it as well? Or maybe you're not. Another AI report that was released by Franchise Insights. This was prepared by Michael Alston for Franchise Insights, and this was released on Wednesday this week, May 20th. It said, along with the rest of consumers, persons searching for businesses have now had more than 2 years of experience with Google's AI overviews, along with chatbots and AI enhanced browsers. How might this have changed the process of finding the right franchise and thereby franchise lead generation? There may have been clues and preferences in the general population for chat over traditional search. In a survey commissioned by Orbital Media, 50% of consumers began their searches by opening a chat app, but that number is no longer growing, likely given that Google Chrome is the most popular browser at 51%, and Google Search remains the default choice on Apple and, of course, Google phones. It's less trouble than opening an app. So it says, if you can see this, it reads at the top of this pie chart. It says, "Do searchers use AI summaries?" And 31% of them said that they often use AI summary, which is an example is the Google AI overviews. 39% they occasionally use. 23% said they ignore AI summary, and 7% said they turned it off. So what can we make of this pie? So if we look at it, we can say that it's broken down in almost thirds. About 30% of people either ignore it or have turned these AI summaries off. 31% said they often use it, and 39% they occasionally use. So it's a pretty mixed bag. And so as a marketer, what does it say? Well, it means that you probably ought to make sure, if you can be getting found in there, like the start of our survey. And by the way, if you're looking for that, please reach out to us. We have an awesome solution. You can reach out to me or our team for that, or schedule some time, or go to skyboundstrategies.com, where you can learn more about their franchise findability program that helps support that. And now for the final chart that I always like to show is the top 10 business categories on Franchise Insights by Franchise Ventures. So this shows the following categories that have showed the greatest number of inquiries over the last 90 days. So the number one category was home services at 28.3%, business services at 23%, senior and healthcare 10.9%, cleaning and maintenance 8.2%, child-related 6.1%, food and restaurant 5.6%, retail 3.1%, education 2.7%, automotive 2.6%, and vending at 1.8%. So what does this mean? Well, what this means to me is, for you and for those of you that are franchise development professionals, is that if you're in these top 10 categories, it is likely going to be much easier for you to find leads. And especially if you're in those top 5 categories, it should be, in general, easier for you to find and attract potential buyers. You might only need 1 or 2 lead sources to generate the number of leads that someone in, say, maybe the 15th category ranked, as an example, might need to use a few more lead sources to generate the same number of leads. And lastly, I just thought this might be a fun thing to do. We're coming into Memorial Day weekend. Hopefully, you're going to be watching some baseball. And I love baseball. I coach my kids' baseball. I've coached well over, I forgot the exact number, but over 20 recreation baseball teams and travel teams, and helping out with doing that. And so I was talking with one of my teammates earlier today about her baseball team, and she thought she was a jinx on her baseball team. And I said, probably not. And I said, most teams are going to be around a 50-50 win-loss record. They're going to win about half the time, lose about half the time. And so then I thought, well, let's look into this. What are the winning percentages by current MLB baseball teams? And so the number one is New York Yankees is at the top of the list with a .570 winning percentage. So they're the best in all of baseball, followed by the San Francisco Giants, Los Angeles Dodgers, St. Louis Cardinals, Boston Red Sox, Chicago Cubs, Cleveland Guardians, Cincinnati Reds, Atlanta Braves, Detroit Tigers, Houston Astros, Pittsburgh Pirates, and Toronto Blue Jays. So those 13 teams are the only 13 teams that have an exact 500 winning percentage or better, meaning they win at least half their games or more than half their games in total. And then the other remaining teams lose more than half their games. So you have the Chicago White Sox, Los Angeles Angels, Tampa Bay Rays, Milwaukee Brewers, Arizona Diamondbacks, Athletics, the New York Mets, Washington Nationals, Minnesota Twins, Seattle Mariners, Kansas City Royals, Texas Rangers, Philadelphia Phillies, Baltimore Orioles, San Diego Padres, Miami Marlins, and the Colorado Rockies. Now, the Rockies are the worst team, but their win-loss percentage is .456. So they are not that far off from a 500 winning percentage. I just thought this was something fun and interesting to take a look at as we are coming into the unofficial start of summer. And I thought that'd be a fun way to close here as we go into starting the unofficial start of summer this coming weekend with the Memorial Day weekend. So hopefully that helps you out. Remember, subscribe to our podcast. You'll find this uploaded here shortly so that you can watch us again if you miss us. And just wishing everyone a happy Memorial Day weekend. I hope you take time to reflect, to show honor and respect for those that have sacrificed, made the ultimate sacrifice by giving their life in helping to maintain our freedoms and doing the best that they can while in the field, in the call of duty. Thank you so much again for being here. My name is Tom Dufour with Big Sky Franchise Team. I'm so grateful and thankful for you to be here. And as we mentioned earlier, if you are ready for a consultation or to talk about how to get found in AI searches, how to generate more leads, convert more franchise sales, reach out to us. Give us a call. Go to bigskyfranchiseteam.com and schedule that a free consultation. We'd be happy to talk to you to see if we can support you. Thanks so much for being here, everyone. Have a great weekend.